Welcome to Cycles TV. This session of the Market Cycles Report is intended exclusively to provide information and education to help individuals better understand cycles and the markets. However, this information is not to be construed as professional advice as to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Yeah, welcome. Here is the Foundation for the Studies of Cycles. My name is Lars von Thienen, and today we have another episode of Cycles TV. So thanks for joining today. Today we will take a look at the crypto market. So in specific, I will check the cycles on Bitcoin and Ethereum. So this session gives you an update on daily cycles in these two crypto classes valued in US dollar. So let's jump into the analysis. By the way, I just need to tell you that I'm today not able to monitor the live chat section because I have some issues to set it up. But anyhow, the stream should work fine for today. So let's start with Bitcoin for the first section. So ramping up Bitcoin in our cycle analyzer. Bitcoin trading at the 50K mark we all know about. So currently trading at new all-time highs. So let's see what the cycles tell us for that instance. I will load up a little bit more data to have it at our hand. So here we see the current data. I will add a little bit more data to the past, as this swing here is a very interesting swing to add for the cycle analyzer. So by design, I will now choose this key top here as the starting point for our cycle analysis, and then update the analysis. So we use this period here for the analysis. And now let's have a look at the detected cycles. So by looking at that chart here, we have the spectrum at the bottom. And there's one key cycle which at least pops up to my attention. That's the cycle around 199 days. It's ranked that as the second most important cycle by using our artificial intelligence, which helps us to decide which cycle to pick from the spectrum. The most important one from the cycle analyzer seems to be the one with a length of 266 cycles. And from having the knowledge, what they take into account is that, and maybe that's also a lesson learned, the reason why this is also the second most important ranked cycle, I would expect, is the left shoulder. Yeah, the left shoulder, if you look here into the spectrum. So you see that if you move to the left in an ideal spectrum, you would see the left shoulder maybe rise down to as close as 0 in the spectrum. In that case, it rises, and then there might be another cycle around 165, but therefore it's not clearly separated. And the cycle with the 266 cycle length is better separated just from the visual shape of the spectrum. So therefore, I think that's the key reason why our artificial intelligence prefers this one instead of that second one. If you have a look at the other important measurements here, which is the Bartel score, you see the Bartel score is much higher for the 199 than for the 266, and even the strength is higher. So, I mean, if you take that into account, in fact, it doesn't finally matter, because these are the two important cycles which are rightly detected by our artificial intelligence. If you have more knowledge on what's happening in Bitcoin, you need to have all the historic knowledge about these cycles in the past movements in Bitcoin. And therefore, I would reference, if you have not seen so far, my public available speech at the Financial Summit we did here early this year, where I explain the long-term rhythm in Bitcoin and why important cycles are there. And there I talked about the nominal 200-day cycle. So, and with that knowledge in mind, so if you have a long historical analysis on different windows in time in the past, we know that the cycle with 200 days is the most important rhythm, which is always guiding important changes in trend in Bitcoin. So therefore, here we are just analyzing one time segment from now back to 2021. So this is just one segment, one window out of the full Bitcoin history. So if you analyze different chunk in that time section, you will come to the conclusion that the nominal 200-day cycle is an important one. And therefore, I would use that cycle even more than the 266. But enough talk on that. Let's use the cycle with the length of 200 days. Just one rhythm which is important to mention here, and therefore I also need to reference the longer term analysis. There's the count of 3 and the count of 5. In short, it means that a major bottom will at least be in the markets after the third repetition after the final peak. So here is the final peak with that cyclic information here in place, and then we count here is bottom number 1, bottom number 3, bottom number 2, bottom number 3. So since February, March last year, and I repeated that here very often on that channel, that this is the last point to get into your long positions and then to expect another upswing to get started. So this is what took place, but we are not here to discuss the past. We are here to discuss now the future of that cycle. So, but it just means that we are, and you should not underrate it, we are still in a Bitcoin summer period, which takes more than just one of these 200-day cycle to reach a final top. So I would now expect up to 5 repetitions to the upside until maybe a final high has been reached in this summer period of Bitcoin. This was just the first upswing, the second upswing, which now comes into the cyclic downward pressure of that cycle, but it needs to be set into context of the longer Bitcoin summer, which started February, March last year. So that's the context we need to set this cycle into. And therefore now let's have a closer look. So we would expect a pause here into March. Yeah, let's say into March. And if you remember, I told you that in the January, February session we had, where I would expect a correction into March, and then the next upswing cycle in the summer period will kick in. So, and you even see how strong the longer term upswing cycle seems to be. So, from the technical perspective and taking that cycle into account, I mean, we had the first short-term trigger of not a sell, but a pause of the upswing here. So we went then down in the technical indicator. We have now crossed above, but be careful. We are still above the upper channel, which is not a sell signal here. So the sell signal from a technical perspective only occurs if we now cross down. So the red line needs to cross down to really trigger a negative momentum for the price. As long as we stay above the channel, which you also can see here, the positive momentum is still in force. And you can also see that during that period, when we cross above the channel, this is not a signal, but you need to wait until the point in time when it crosses down below. So you see the full period from here to here was still more a positive confirmation of positive momentum, and it ended here at that point once we crossed down. So, and therefore we are now in a similar situation where we could see maybe short-term pullback. But I would wait. I mean, I would pause maybe any long positions into March. So it's more or less expected to see some minor corrections, maybe some upswings here, and then the next larger upswing is then expected from March into the summer period. I mean, just looking at the cycles, if this current rhythm will continue into Bitcoin. So be a little bit careful until March, or maybe use any pullback, a short-term pullback, which might be due here, even a small correction into March now during the next 3 weeks would be a good situation to re-establish further long positions to be in this upswing cycle once it starts. And to the downside, I think the risk to the downside is really limited because, as I said, we are in this larger upswing summer period for Bitcoin. If you want to have more knowledge on the summer period, please just cross-check the Financial Summit and my publication there on the summer period. So that's where we are in the Bitcoin cycles. I mean, we could stack up now the 266-day cycle to build a composite, which I've done here. And this will not alter the projection in general. You see, maybe the low shifts a little bit. So I have a close look here. What happens to that low point here in that chart? So if I add 2 cycles here, it's more or less the same situation. So we have currently now a downward projection based on 1 or even just 2 cycles, which is quite similar. So the overall outlook will not change even if we bring the additional cycle into play. So long analysis, short final summary. We could expect a short correction in Bitcoin from the technical situation. We need to wait until the trigger is really in. If this is not the case, maybe sideways consolidation or continuation or pause of this upward momentum, short correction, and then look out for March for the next opportunity when the long cycle will kick in again. Number 1. Number 2 is Ethereum. I also wanted to cross-check that with you. So let's load up the daily chart. So what we see here is now the Ethereum chart with the standard setting we have here. Huge upswing here already. So let's add a little bit more data to have a more view about the past. I would do the same as we did for Bitcoin. I mean, here's a key top in the past, or this low here. These are the 2 points maybe I would lose. I would not shorten the period or amount of data I would take into account for the cycle analysis. So therefore, if we want to make it to the low or top in the past, it would either be this key low or that key top here. So in my case, I will extend the analysis to that point so that we have this swing also available for the data for our analyzer. Now, if we have a look at the spectrum, it's not as easy. So some more cycles are showing up here in that spectrum, which 1, 2, 3, 4, 1, 2. Yeah, these cycles would be in close consideration to each other. And you also see the cycle scanner is picking 1, 2, 3, 4 cycles out of that mix, which could qualify for that. So here we also have the 260 something cycle. I have not on hand the historical analysis on Ethereum here, so we need a little bit treated with the separate knowledge on that. You see here we are in this situation that we have crossed above the upper channel, but there's currently no indication that this will now cross down. However, this upswing from a cyclic perspective seems to have to come to an end, and the previous rhythm seems to be nicely aligned, with these timing situations. So I think could be used and not quite the same, but similar to what we discussed in Bitcoin. So here, at least a cyclic downward period in March, April, June. But what is interesting, you will always also find the cycle with a length of 200, not picked here. I think, again, for the left shoulder of that cycle or the right shoulder of that cycle. So that's why this shorter one has been picked. But I would be interested in how this looks. And this would give you a similar picture like we've seen on Bitcoin. So that downward move into March, April. And if you just use the 200-day cycle, again, it's here March. So the March period and the extension already into this downward projection. So I think the overall positive longer-term cycle, which I did not share here, but I just refer you to that long-term analysis from January, February, which is still valid for the long-term perspective, is still valid. So any short-term downside cycle should be taken very careful, as I think the downward projection is very limited based on that. And I think you can also see that in the past tops of that. So there is more to the upside than to the downside during these swings. So here was more sideways phase. So that I would more wait for the upswings from a timing-based perspective. So we're talking about timing. We are not talking about absolute price movements here. So the upswing phases of these cycles should be more interesting than the absolute price movement. And the downward cyclic projections during these situations should treat it careful, maybe to look out for pullbacks in the price, as same for Bitcoin, to position here for another longer-term upswing. So that's it. If we just review both charts, so let me now cross-check if I can bring. Yeah, I have the chart open, so I managed to get to the live chat section. So now I would switch to what we always do here on the channel in the final section, that I will spend some time dedicated to your questions. So if you have not, feel free to push in or ramp up your questions. I will see them, and let me now start to read or go through your questions. Lars, can you post your speaking that you did earlier this year at the summits? Thank you. Yeah, give me a second to pull up that link for you. Just a moment, please. So let me open the page and then I will show you the link, because I think it's an important analysis of Bitcoin, which gives you a roadmap for the year. But let me search for the video. And then is it? There it is. Okay, let me share the screen with you. So it is on our Cycles TV channel, and it is here the Market Forecast 2025, where I did a joint session with Larry Williams. Larry is speaking the first part of that section, and in the second half of that section, I will update you on cycles in crypto on the long-term perspective. And the link to that session is here. So let me copy that. Let's start at copy that. And I will put it in the chat section for you. So smiles are good. Here's the link to that video. And for sure, for everyone else, if you have not been part of that session for the long-term cycles in Bitcoin. Elliot, you have a question in regards to if you build a composite cycle, which cycle from the composite cycle are you selecting for the cyclic RSI? So that's also a very interesting question you brought up, and let me try to answer that while looking at the chart. I will just use the last chart we used here on Ethereum. So if we just use one cycle, I mean, it's simple. If we pick another second cycle, it will build the composite. So it will stack up both cycles on top of each other. This results in this kind of composite cyclic projection line here. But the question now relates to what information has been used from these two cycles to calculate that cyclic RSI. And the short answer is you will be able to see it in the upper left corner of the chart by itself. And here it's interesting, so thanks for raising the question. It picked 132 to build the RSI. And you might now ask, where is this number coming from? I've not seen 132. We've just picked two cycles with a length of 195 and 264. And here you can see it has picked half of the cycle length from this 264 length. So there is a little bit of logic built into if a very long cycle has been picked from the composite, internally it will also use an harmonic related to that long-term cycle, because a setting of 264 for the cyclic RSI is too long for a technical calculation, and therefore it's using the harmonic half of the 264 is then resulting in 132 to that. If you don't use that, it will pick the 195, and as 195 is still fine, you see it's also then picked there. So I would not call it artificial intelligence. It's just some algorithms. Yeah, we don't need to overjudge this, which are included in that. So if you pick two, there will be an algorithm to check both or three or four, however, what cycles you use. It will then always try to use the longest, because it will assume that the longest is the most important one. But if the longest then is too long for make any useful calculation, it might use an harmonic, so to reduce it to half of that cycle length. This is exactly what happened here for that composite. That's the answer, Elliot. Marco, you have a question also, especially to the situation we see here. So let me read your question first. In case there is a prolongation of the bullish movement, which I mentioned with this summer period in crypto, compared to the indications of the 200-day cycle, because the 200-day cycle is currently in its downward swing. Yeah? So is it better to use the cyclic RSI and the FLD indicators or combine each other? So first, Marco, yes, I think exactly that's why you always need to add more indicators. So for me, important here is if you see, and I mean, first, you always should pay attention to the longer term cycles in force, which for me is the summer period in crypto we are right in now. So that's the longer term cycle, which is upward moving. So if a short term cycle here is moving against that, I would never go against the longer term cycle. And if this happens, that's exactly why I would reference here to the cyclic RSI first. If this is still upsloping, let's have even a big screen here. If this is still upswing, it's just a confirmation that this longer term upswing is overriding that short term cycle. So that's the first indication you can take from the cyclic RSI. If this will fall down again and then break across the blue upper band line, that is an indication that the shorter term or the 200-day cycle in this case here comes into force again. Until this does not happen, we see confirmation of a longer, stronger cycle in force until this stays upsloping above the upper band. So it's more or less a strong confirmation that a stronger momentum is still in force. Once this turns down, you have the first indication, and once this crosses below, then you have confirmation of that shorter term cycle here. So it might happen now on the road to March. So that was the ideal situation, which was then give us maybe a short pullback here. And then I would look out for that timing window here and then pay closer attention to the technical condition in that time frame. And yes, the FLD can also be used now to confirm if we are in that cycle or not. So thanks for mentioning that. Sorry. So we can bring in the FLD. We use half of the dominant cycle to shift it forward in time. And we see, I mean, in order to confirm that cycle, there's a long way to go down. So I would not expect that this will even be confirmed. Maybe this could act then as resistance. So maybe we see a pullback to that level, yeah, which is close to the FLD, which is also the case how the FLD behaves. And if we see a pullback against that level in that timing window here, that would be maybe then the confirmation that the next upswing could come into place. Okay, Marco, that would be my answer to your question. So let's clean up the chart a little bit. And I see that Andrea, you brought in the question so that normally I use the length of 850 bars. And in this case, I changed it here in that case, or in that example, to 996. And it was just the question why I did that or why I think it's more appropriate. So let's start with a fresh chart to explain these numbers here. So let's refresh it. But we need to bring in Ethereum again to stay at that same example. Just a second. So here we are again. So if you start with a fresh chart, you start always with 850 bars going back into the past for the analysis. So we could even load more data, but it is not used. So this is the standard configuration with the 850 bars. So and the 850 is just an artificial number picked to ensure that you have a standard setting in place, which allows us to cycles up to a length of 300, 350. So we have 3 repetitions of 300, gives you 900 data points you would need being able. So this is the minimum amount being able to detect cycles with a length of 300. If you want to have more reliable information in the spectrum, you should always align the start of the analysis to an important top or bottom of your raw data in the analysis. Because cycles emerge from important lows or die or fade out at these points or tops. So that's really the birth or the death of existing cycles. Cycles never stay static all over the universe time span. They come and go, so they come to be more important and less important. And the best points to detect when cycles start to become important or less important are key tops and bottoms in the past. So therefore, Andrea, if you can leave it that way, and by the way, by doing that, the 150-day cycle is maybe 123. I mean, the left shoulder is not really perfect, and the 51 cycle would be picked, but I would count this as too short. At least for me, it's anyhow too short to make any use of that on a daily time scale. Maybe if you do intraday trading, this 51-day cycle might become interesting on a 2-hour chart, but let's skip that for now. So the only cycle we would be left here is this one here, which is also still in a downswing, approaching a low in March, which is nothing completely different to the 200-day cycle we just discussed. And the 200-day cycle is also here, not really prominent. So we can also build the composite out of these cycles here. The 200 and the 250 is also here. And you see it's more or less not a different picture. So just by going with the 850 or even deselecting these cycles here, you would have the same situation with the current downswing phase of the most dominant cycle in force. You see, even if we pick this for the cyclic RSI 150, we don't have a different picture on the CRSI here. It's still upward sloping above the upper band. So we have no indication of a short-term correction here. It's more continuation of a stronger, longer-term upward cycle, which is in count. And this, the next upswing phase from the shorter-term cycle is then expected to start in March. That's the same as we would have added more. So the general outlook, you can stick to the 850, as I just show here. You would come to a similar conclusion. As said, if you just want to give it more precision, and if you ask, okay, what would be a better date in the past, that's why I then always zoom in. Yeah, let's do this together here. Let's zoom in. Then I'm looking, okay, what would be a better alignment for the start? I would need to shorten the analysis if I would like to pick that key top here. And I said I would never go below 850. So there are only two options left if we want to have better precisions. Either we extend it to that key low here, or we extend it to that key top here. So this would be option 1 or 2 to make that spectrum analysis more precise. So therefore you could also use the first approach. Let's align it here to that bottom. Yeah, update the cycle scanner. And you will see that these cycles become more important. It's still there, the 155. And you will see now it's even the most dominant one. But you see the other cycles also now showing up. And we can also change it now to the third important. So if there's a huge swing also there, so I would count this as a huge swing in the data, that would be useful to have it in the scanner, because this is not just a simple blub. This is a key swing in the data set. So then it's always recommended, let's use that key swing into our analysis, because there must be something dominant for that. So that's the reason, Andrea, I'm using that key top here. And then you see these cycles become equally important. Yeah, so there's no big change or no complete change. So this cycle around 150, 160 has now reduced a little bit in amplitude, and the 200-day cycle and the 260 cycle have received more importance in that cycle. So, Andrea, that's what happens if you switch the period used for the analysis, and you see it sharpens a little bit the swing on the right side to your projection. So that's if you have the knowledge when and how to change the 850, that would be the basic approach you can use on any data set. Do not shorten it. Maybe extend it to the next kilo or top. That makes the spectrum analysis more precise. It makes the phasing more precise, which gives you better precision in the phase projection and the length detection in the spectrum. Okay, Peter, you also have a question. Is there a difference in the expected strength of the momentum when the longer time frame cycle just leaves the bottoming, respectively, has already passed a good amount of its upward move? Peter, I think that's it's a very interesting and important question. I think that's a common situation which we will brought in as cycle analysts, that we always have a longer and a shorter term cycle, which are not always in sync. So what we should always look for, or you should always monitor different assets and then try to find the points in time when long-term and short-term cycle align in the same phasing, either bottom or top at the same time. So if this is not the case, what is you're referring here in your question. So what strength in regards to momentum is overruling the other one? So the longer on the shorter, or the shorter the longer term one? We never know upfront. We never know upfront if the shorter term cycle, so the downswing in the 200-day cycle from the shorter term cycle, will overrule the longer term cycle. It's not always the case that the longer term cycle has a higher amplitude. Sometimes there's also a change that the shorter term cycle plays a more important role. So this can only be seen and confirmed by price action, not by cycle analysis on its own. So in order to detect which cycle is stronger, we need to analyze the price movement. One option I prefer is using the cyclic RSI, which gives us an indication what is happening price-wise. So as mentioned, if we are above the upper channel and it's upward sloping, still on the signal line, we have strong signal that the longer-term positive cyclic phase is in force. If the signal line turns down, that's the indication when the shorter term cycle is in force. If it crosses down, then we have the opposite, and so forth. So that's always important also to analyze the cyclic RSI on the longer term chart and the short term chart. So you need to have 2 cycles and 2 technical indicators which you should view or monitor in parallel to differentiate which momentum is overruling the other momentum. So, but therefore, as said, we cannot really use cycle analysis. We could use the FLD once a cycle is confirmed, but in that case, a lot of momentum has already been there upfront. So the FLD only kicks in once half of the cycle has been passed already. So it's just a confirming indicator that the cycle is in force. It's not telling us ahead of the move that the cycle is forced. So we can use that to wait until we have the confirmation to then ensure maybe we catch the last move of that cycle. That's the FLD. But therefore, this CRSI, something in between. The FLD is very late in the confirmation of the cycle. As said, half of that momentum has already been passed. The CRSI is very early as a price indicator, giving us confirmation for where we are in the current momentum. So that's why cycles timing, CRSI technical information about the momentum, what's happening at that current time frame, and FLD, that's more than the third, but also lagging indicator giving you confirmation of that cycle. And if you watch all these 3 methods, which are based on cycles, cycle analysis, timing, dominant cycles, cyclic RSI, tuning the technical indicator by the rhythm of the market cycle, which gives you a cleaner technical indicator. And third, using the FLD to have confirmation if we have passed half of the cycle in the direction of the current phase. That's how to get a clue on momentum, what's happening. At least, Peter, I hope it helps a little bit how to view or how to judge these different informations. Yeah, smiles are good. You have a question. I've seen the cycle scanner give one set of turning points with the 850 bars approach, and then if you add more data as possible, it changes the cycle turns quite a bit. So that's the difference between not choosing too much historical data, because I often try to explain that if you add more and more historical data, you might assume the more data, the better. That's the first logical conclusion you would have, but that's not always the case. The more data you add for the historical analysis, the better the analysis on which cycles on average have been active in the historical perspective. But as we know, cycles are not static over a constant historic period. Cycles vary as a principle of variation. So the length of the dominant cycle not switches completely, but it's growing, it's then shrinking, the length of that cycle. Also the amplitude varies, so other cycles get more important than the other cycles, and both effects are in combination. So amplitude varies, cycle length varies, and the phase, so the starting point and the low point of these cycles, everything happens in parallel. And if you assume just a very long static time frame from start to end, what the spectrum analysis, and doesn't care which method you throw on your data set, will try to tweak out the perfect cycles for that given amount of time, which means you're just forcing a kind of brute force algorithm or a backfitting of possible cycles which match the history quite perfect. But in that case, you have just averaged out possible cycles in a long historical window, which, if you take the principle of variation serious, will not help you anyhow. It might look good on past data, but the swings of the past data might not just be on 1 or 2, 3 key cycles, with a cycle spectrum might suggest you. You need to analyze smaller windows or chunks in time to being able to detect what cycle is currently active, because the average cycle of the past will not help you anyhow to get a clue on what's happening in the future. To get a clue on what is expected to come, you need the best possible view on amplitude, phase, and length for now. And therefore, if you throw more and more data into the mix, it might show up with different cycles being detected, but it's just trying to average the past into a spectrum, which there is never a static set of cycles over the whole period you push into an analyzer. So sorry for the long answer. I forgot who raised the question. Who brought that up? Smiles are good. Yeah, I think it was. Sorry for that. I made such a long argument with you here so that I forget the source of the question. So therefore, it's an important question, but please at least hope that I have sent you the impulse of thinking about what is the difference of putting too much historical data into a cycle scanner. And by the way, this is independent from the application or spectrum analysis or digital signal processing approach or application that you use. This is important knowledge for you if you apply cycle analysis. Regardless what application you use, there are also other tools out there. But be aware, not always a long-term analysis of 200 years of data will give you the best clue about today and maybe the next 2 months. But think about it. I think in regards to time, let's close the question with that answer. Yeah, and Marco, in some cases, I use the minimum or maximum reached by the RSD to assess. Yeah, that's also a good point. So if you have the running slope difference test activated, this helps you to detect important or validated changes and trend in the past. That's a good point, Marco. Thanks for bringing that up. So this adds up to the question where to put the starting point for the analysis in the past. We discussed 850s and I went back 900 something. I explained why I picked these dates, and Marco just brought up you could use the running slope difference test, which is integrated into our platform, which helps you to visualize important changes in trend in the market. And these are good starting points to start your spectrum analysis with. Thank you, Marco. Very, very good proposal. Okay, so I would assume we had some key questions which on cycle analysis are important to take into consideration, regardless of which asset class you're analyzing and regardless of which tool set you're using. These questions are valid for every analyst who is dealing with cycles and spectrum analysis and digital signal processing. And for Bitcoin and Ethereum, I wanted to update the cycles. If you are following this cycle, there's nothing really new. But if you set this into context, I think this gives you at least a hint what to look out for, which timing you should look for, and have a close look at your technical indicators. So thanks for joining me today. Again, thanks for having you here live. At least it worked out to get the chat section in. That's what I'm happy with. And I hope to see you again next week. Same place.